Hello, everyone. This is Kripa Anand, and welcome to the Canadian SME Small Business Podcast. Today, we are exploring the blueprint for building market leading Canadian platforms. In 2026, scaling a business requires more than just capital. It requires a disciplined buy and build approach and a deep commitment to the people behind the numbers. Joining us today is Andrew Clark, CEO of Saltire Capital Ltd. Andrew is a legendary business builder who famously grew Park Lawn Corporation from $30 million capital market to nearly $900 million. From founding successful hospitality ventures to advising high growth firms like Clear Estate and Anlor Healthcare, Andrew's track record of delivering 300 plus percent plus returns is world class. He is here today to discuss his HALO investment thesis and the current opportunities in the Canadian capital markets. So, before further ado, let's welcome this very special guest that we have. Andrew, welcome to the podcast. Such a pleasure to have you with us.
Thank you. Pleasure to be here with you.
Now, Andrew, you've developed this specific investment framework called the HALO Thesis that guides how Saltire Capital identifies and supports Canadian companies. So
Yeah.
please go ahead and share what this thesis is from a layman's perspective and why does it matter for Canadian SMEs in today's day and time?
Yeah, so it's a great question. The HALO thesis is driven, the acronym is heavy or hard assets with low obsolescence. So these are businesses that have essential, hard to replace inputs,
Mhm,
things that are not going to be overly impacted by AI or rapid technological changes. So
mhm,
really, we're focused on old economy, real cash flow generating positive business. Again, hard assets, low obsolescence.
mhm,
So these heavy these heavy equipment, these heavy assets, and take the hard to replace inputs that exist in the Canadian economy, critical minerals, energy, these type of things that underpin global supply chains.
mhm.
And while AI can benefit these types of industries, it's not unlikely to overturn or completely disrupt them. So this is the piping and the infrastructure that
Mhm.
supports the real world economy. And because investors are prioritizing or using these type of investments as a counterweight to the
Yeah.
more to AI and other technologies, we think that there's a great place for them in the market.
No, definitely. Every day we are waking up to new advancements and new technology taking over. And in that, this concept sounds like a fresh, breath of fresh air and a much needed pause that is required. Um, Aligning your investment with a clear, disciplined thesis, it ensures that growth is sustainable and not just accidental. So, thank you so much for that, Andrew. Now, I'd love for us to, build the conversation around how Saltire partnerships model differs from the traditional private equity. So, please go ahead and explain that. How do these two models differ, like, from what is existing in the market already?
Sure. So Saltire, we're a public company. We're traded on the Toronto Stock Exchange. So we offer business owners a traditional, non-fund, non-financially engineered way to transition their business. We think
Mhm,
about this as the succession of their capital rather than the succession of the business itself. So we allow owners can transition under flexible terms. We prioritize management and prioritize people. Our as a firm, we don't get paid on the success of the deal. We're investors in the stock, and we get paid on how the stock performs. So
mhm,
we get paid on this, and we all, as shareholders, get incentivized from the return of the underlying businesses, not necessarily by transacting over and over and over again. So
mhm.
we're long-term partners in theory. We can own businesses forever. We take a decades-long view when we're looking at making investments. So that's quite different from the traditional private equity model, which more often than not has 5 to 7 year investment horizons, as you would know,
Mhm.
and high incentives for the managers of those private equity funds to transact and sell those businesses. We don't think about it that way. We think we're only going to invest in a business if we're prepared to own it forever. And so that is an important part of the thesis. The other important part of the thesis is us willing to partner with established management teams. Again, part of capital succession rather than management succession. And so, if is a next generation of managers or people who are owner or small owners, but part of the operating team who
Mhm.
seek more independence, more control to buy out a current owner, then we can do fairly creative things in those type of situations.
Very interesting. I think treating management teams as, true partners rather than just assets, it creates the trust that is needed for long-term value creation. So thank you so much for sharing that. Now, Andrew, let's discuss how your recent acquisitions are strengthening essential infrastructure services. So, I'd love for you to educate our audience on why invest in infrastructure business and how exactly does this fit in your broader strategy as well?
Yeah, so again, we would think of infrastructure as like in the gold rush, a couple hundred years ago.
Yeah.
You could go in and get involved with extracting the gold, or you can do the picks and the shovels. And we do the picks and the shovels. And so infrastructure businesses, I think, with in the current macro political climate, build Canada, all of that type of thing, infrastructure businesses serve to benefit in an outsized way in that respect. And so
Mhm.
our investment in the entities that support those infrastructure businesses, like our recent acquisition of Sandstone Investments, which sells, repairs, rents, and maintains heavy equipment and agricultural equipment, is right up that chain. So obviously, food and roads are fairly important things in the Canadian economy, and
Yeah.
so we provide services and equipment that supports the ongoing growth in those particular businesses. So ultimately, we're looking for undervalued or fairly valued businesses
Mhm.
that support the infrastructure side of things. Again, we believe quite strongly that the Canadian economy is going to be led by infrastructure and including technology infrastructure over the next number of years, and the businesses that we are investing in and acquiring and partnering with
Mhm.
um, all sort of fit that bill. They also tend to be quite fragmented markets.
Mhm.
So there's lots of opportunities for us to acquire businesses and then grow their scale by making other acquisitions in non-competitive markets.
Thank you so much for the information, Andrew. And on that note, here's a special message for all of our listeners, specifically for all the founders and investors watching. In 2026, the real wealth is being built in essential businesses, the ones that keep our infrastructure running and our community stable. If you are building a company with real world value and stable cash flow, you have an asset that is worth more than any tech trend. Don't be afraid of the unsexy industries. Andrew has proven that with the right discipline and a halo mindset, these essential sectors are the key to outsized returns and lasting impact. Coming back to you, Andrew, I agree with you. Investing in businesses that deliver tangible values to stakeholders ensures a portfolio remains resilient regardless of, the market volatility. Now, moving ahead, let's look at the challenges Canadian companies face in accessing growth capital, because access to capital, has remained a critical barrier ever since. So, just to get from your perspective, what changes are needed to unlock more capital for Canadian companies, Andrew?
That's a really good question and a really complicated one, but a good one. So I'll try my
Mhm.
best to answer it. I think the potential, let me start by saying I think the potential in Canadian capital markets is very strong.
Mhm.
We're a sophisticated market, highly regulated market, that is very transparent. And ironically, some of that heavy regulation, whether it's the cadence of financial reporting, the accounting and other regulatory standards that are imposed, these are pushing companies, I think, out of the public markets. the regulatory framework.
Hmm.
As we've all seen, there are many great Canadian companies that have been privatized over the last little while,
Yeah.
um, and largely, or at least in no small part, because of the regulatory and accounting framework that are out there. So I think what we need to talk about here and think about are practical reforms to the way that the markets function, commercially minded regulation, reporting flexibility. There's a great initiative by the TSX Venture Exchange to do twice annual reporting rather than every quarter. That
Yeah.
will allow businesses to focus on operating and building rather than a constant reporting cycle. So that said, there still remain access to capital challenges for smaller and lower middle market businesses.
Yeah.
Private equity in its original form did a lot of that. But
Hmm.
as so much capital has flown into private equity, it's made it so much harder for them to meaningfully scale at lower levels. And so that's a part where we think we can play at Saltire as well.
No, definitely. That's very well articulated. Modernizing our capital markets is essential if we want to keep our high growth businesses and talent right here at home, right?
That's right.
Um, Andrew, let's do a little time travel now. Imagine I were to
Okay.
give you a time machine and say we were to go 5 or 10 years into the future. When you
Yeah.
get out of that time machine, how exactly do you envision this industry changing?
The Halo Industries, that's a really good question. I would anticipate that there will be a a lot of job opportunity created in these industries.
Hmm.
I think that that these industries will become far more integral to the Canadian economy,
Hmm.
outwardly integral to the Canadian economy. I think, people who operate within them, within Halo type of industries know that they're integral to the Canadian economy, but I'm not sure that everybody else more broadly does. They tend to read the headlines, and we're trying to stay below the headlines. And
Yeah.
so I think they will have created a lot of wealth for a lot of people,
Yeah.
and it is my sincere hope that they become sort of sexy like some of these other industries. We always think that we always believe at Saltire that the sexiest thing out there is cash flow, and
Uh-huh.
that's what that's so I would love for the broader market to interpret that as well,
Yeah.
and I think it will because as you well know, probably better than me, these things all move in cycles.
Definitely. I completely agree with you. You've painted quite a picture there, right? And the future looks very interesting and very promising. Um, on that note, Andrew, is entrepreneurship something that you always wanted to do personally as well? Growing up, is that something was, that was intrinsic to you, or maybe you stumbled upon that in your career?
It was more by accident, I have to say.
Oh,
It
okay.
was I came at it from a place of some relatively strong opinions and an
Yeah.
independent streak, and so I think that doesn't necessarily lend itself to working well in large organizations, large bureaucratic organizations. So
Uh-huh.
I think I came on it. In retrospect, very naturally, but it's not
Hmm.
something I sat at home and dreamed of as a child. So
Uh-huh.
no, but I'm certainly in the right place right now, in terms of building things.
Yeah, that's amazing. And also in this world of, tech and AI, as we talked about, the course hard skills can be easily replaceable. From your
Yeah.
extensive career experience, Andrew, what do you think are the most important soft skills that a person needs to have to be successful? I'm asking this from a perspective of someone who likes things old school.
Yeah. Yeah. I think patience
Uh-huh.
is exceptionally important.
Mm-hmm.
We often say that and this is a well-worn quotation, but that takes 20 years to become an overnight success. And
Yeah.
so patience is important. Thoughtfulness is important. Having a people first mentality, because ultimately, none of the businesses, whether they're tech enabled, whether it's AI driven or whether it is old economy stuff like
Yeah.
we're talking about here today.
Hmm.
None of this survives without great people. And I can say that in all of the transactions that I've done over the years, that I've never seen a great business run by a poor leader. But I've seen poor businesses become good because of great leadership, and I think that is I think that is very important. So patience and people. That's what I would
Yeah.
that's what we those are our guiding lights.
That's a beautiful answer. I'm loving this conversation, Andrew, and definitely we'd love for you to be back, maybe for an in studio episode, the next that we do. But for now, before we let you go, Andrew, if there's one final piece of advice that you'd give to owners who are, navigating complex deals and partnerships, if you could whisper that one thing into their ear right now, what would that be and why?
It goes back to the patience comments. Take your time, breathe,
Yeah.
be thoughtful. I think that, particularly in Halo related businesses, you have more time than you think you have. So I would
Hmm.
say that, yeah, and so take time to survey the market and see what's really out there and keep an open mind. I think, there are a lot of interesting financial partners out there and a lot of interesting ways to transition business, but keep an open mind.
That is a great reminder that the best business relationships are built on shared support and mutual respect. Andrew,
Agreed.
thank you so much for joining us today. It was an absolute pleasure.
Thank you very much for having me.
All right, that was Andrew Clark from Saltire Capital Ltd, a masterclass on how to apply a disciplined investment thesis to build the next generation of Canadian market leaders. To all the listeners, thank you so much for tuning in to the Canadian SME Small Business Podcast. Be sure to subscribe and visit CanadianSME.ca for more such resources. And lastly, a very special thank you to our partners, UPS and ADP, our HR partner, for their ongoing commitment to empowering SMBs across Canada. I'll see you guys in the next episode. Kripa Anand signing off.